Hello, everybody. I hope you guys are doing great today. In today's video, I want to speak about a company that's a staple within the United States and a global powerhouse. This company is called PayPal. It is a leader in the fintech space, financial tech space. The name of the stock is PYPL, ticker symbol PYPL. Now, a lot of people love this stock and a lot of people hate this stock. And some people are on the fence. Me personally, I don't love it. I don't hate it, but it is a medium-term play for me. I'm not going to be holding this stock past 2025, and I am going to be selling it sometime in 2024. I do have a position in PayPal. Most of my position is leaps for options. My strike price, I believe, is $145. They expire in January 2025. And I never think that PayPal is going to go back to $300 a share or even $200 a share. I think those times are over. I do believe that PayPal can get back to $110, $120 a share. And to be quite honest with you, if PayPal hits $100 a share, I am out super fast. Lickety split. You're going to see literally a cloud of smoke behind me. I'm going to take my profits and put them into another company, probably something like a SoFi or a Palantir, or maybe a Google and a Microsoft. But that's neither here or there, and I could be completely wrong one way or the other. But one thing is for sure, PayPal has seen better days. The current price of PayPal is $50.90 as of making this video, which is, lo and behold, a brand new 52-week low. As a matter of fact, over the last 5 years, PayPal is actually down, believe it or not. PayPal is down 38.6%. And since PayPal became a publicly traded company, it is literally only up around 35%. That is absolutely ridiculous. PayPal is a behemoth in the fintech space, and PayPal, for all intents and purposes, is not dead. PayPal's revenue is actually going up. PayPal's revenue growth is going up. PayPal's users is staying put. PayPal still has over 40% market share of digital payments. And PayPal is losing transactional margins, but that's about to stop as per management. And you can either believe in that or not believe in that. But one thing for certain is with Alex Chriss, the new CEO of PayPal, things are changing. And I'll give you one prime example. PayPal has a company that they acquired in 2021. This is one of 4 companies that they acquired for a total of $500 million. So we don't know the actual specific price of them acquiring this company. The company is called Happy. And Happy essentially is a return service where you don't need boxing and you don't need labels. Think about very similar to what you do with Amazon, except it's not specifically for Amazon. It's for, I guess, everything outside of Amazon. So they bought this company in 2021, and they just offloaded it to UPS. The average estimate that UPS is paying for this is $760 million. I'm going to go over the math in just a moment, but it's not actually me saying this. It's a friend of the channel, friend of the Palantir community, SoFi community. The guy's name is Crossroads. So I'm going to read you a tweet that he put out earlier. If all the numbers coincide and all the numbers make sense, they bought it for $500 million. They're selling it for $760 million. They're making $260 million of profit, or around 50%, not counting how much revenue they actually generated from that specific company. That is a good buy and a really good sell. And they made that over the course of the last 2 years or so, right? 2.5 years. Things like this really are shaking up PayPal, and I hope we're going to see more of this from Alex Chriss. PayPal, for some reason, thought that they can be an everything company, and when money was cheap, they started acquiring a shit ton of different companies, and most of those acquisitions were shit acquisitions that does not actually help PayPal with their underlying core business, which is a payment processor. Unlike starting a stablecoin that actually does help their bottom line in many different ways that I covered, but just to give you one example, when people buy PayPal's stablecoin, whether you agree with it, like it, not, love crypto, love PayPal, whatever, They give USD in return for this digital currency. What do you think PayPal does with that USD? PayPal invests that into short-term treasuries, and they're making a very nice yield on that money. You see, they give you $1 digital, they're collecting $1 USD, they put that $1 USD in treasuries, and they're making their 4 or 5%, whatever they're making. It's a win-win situation. And I wasn't going to give you another reason, but I'll give you another reason why the PayPal USD is good, why the PayPal digital stablecoin is good. It's good because it's giving them a lot of exposure in the crypto market. And again, like it, hate it, crypto is here to stay. And some people hate stablecoins, but at the end of the day, this gives PayPal exposure to the crypto market. Now, I am a crypto bro, so I like that. Let me show you this tweet really fast, and let me know in the comments down below, do you or do you not agree that Alex Chriss is, in fact, going to shake things up when it comes to PayPal? I literally pray that he does, because this is one of the bullish theses of mine and a lot of people in the community. We believe that Dan Schulman, although he did what he could with PayPal, it was going in the wrong direction, and you needed a bright, aggressive, younger CEO, and that bright, aggressive, younger CEO is Alex Chriss. Now, I'm not sure if this selling of Happy is from him or this was supposed to be happening this entire time, but I would like to think that this is directly related to him and his leadership skills, and I am looking forward to seeing what's going to happen in this Q3 earnings that's going to come out on November 1st. If I'm not mistaken, that is Wednesday. I'm not sure if I will be covering it live. I'm probably going to be watching on Future Investing Tanner's channel, but maybe I will cover it live. Let's take a look at the screen. Real fast, this is the press release from UPS. UPS to acquire Happy Returns, a leader in reverse logistics, announced today that it has entered into an agreement to acquire Happy Returns from PayPal, which is really important. Now, if you go to Twitter, and please, I'm going to ask you to follow Crossroads at KROSS_Roads. He's a Palantir bull. I think Palantir is his largest position. He's a father, his children invest, and he has some really good information, specifically in fintech, but not only. And I think PayPal is his third largest position. SoFi is his second largest position. So he comes out with a tweet. I believe this came out yesterday. He says, PayPal made money on selling Happy Returns. Now, this is going to be very difficult to figure out, because if you're not an OG in PayPal, which I'm not, and you do a lot of research online, it is super duper hard to find all the information. So I'm going to give Crossroads all credit right here, all freaking credit over here, because it's very hard to find all these numbers. And I've been searching for that last hour. So let's take him at his word. PayPal sold Happy Returns to UPS, as reported yesterday, as PayPal shifts away from Schulman's super app to a leaner, more focused company under Alex Chriss, ACCE as Alex Chriss. These sort of transactions make sense. Philip's comments remind me that UPS had their earnings today, and they said they acquired M&X and Happy Returns for $1.3 billion in total. UPS just reported numbers. And that's where he's getting this from. I didn't listen to the earnings call from UPS. That's why I'm taking it at face value. I am believing everything that Crossroads says, and there's no reason not to, because he's been an absolute stud when it comes to this. I tried to verify this, but I can't go through the entire earnings call, and I couldn't actually find it. I did find the M&X acquisition, and if you look online, there was an article in 2021 from Reuters that says that M&X cost UPS $570 million. So if they said that they made an acquisition for two companies for $1.3 billion, and you minus $570 million, that means that they made $230 million, right? So 1.3 billion minus 570 million, that's 730 million for PayPal. Now, this is something that I could not find. He says, we do not know the exact figure PayPal paid for the company in 2021, but we do know it was one of four acquired for around $500 million. So at the most, PayPal paid for Happy, it would be $500 million. So 500 million minus 730 million, they made 230 million on the deal. However, let's just do an average and say that 4 companies divided by 500 million cost 125 million. We can say that PayPal maybe made 600 million on this deal. The actual numbers we're not going to know until the next earnings, but not bad at all, PayPal team. By the way, this is Philip that he's talking about. I don't know who this guy is. However, he is Phil, GhezelBash. And he was just talking about since 2021, PayPal has significantly expanded happy returns, organic traffic from Google via SEO. This could in fact raise the valuation they sell it at. I really have no idea, but this is just an observation from the line of work. And that's what he is saying. What Crossroads is saying is that 2 things. Number 1, PayPal is shaking things up with Alex Chris. I completely agree with that. And that's one of the things that I'm banking on. No pun intended, because, PayPal is kind of like a banking stock, fintech, whatever. They do have savings accounts, though, and they offer 4.5% annual percentage yield, which is really nice. But they're shaking things up and they're trimming the fat, profiting wherever they can, increasing their profits. This is going to increase free cash flow, and I think quarter 4 is going to be a really big quarter, but for many different reasons. Number 1, Gabriella, the interim COO, CTO, she's one of the C executives. She said that the inflection point for PayPal is going to be quarter 4. Like quarter 3, this quarter, it's still going to go down the transactional margins, but that's going to turn around quarter 4. If it in fact turns around in quarter 4 and this operating cash flow is going to go up because of these sales, and that's not the only one, this is going to be a banger of a 4th quarter. And like I said, it doesn't take much for PayPal to turn this around, and it's going to go, to the moon. But to the moon of, let's say, 80, 90, 100, $110 is still over 50% from their all-time highs. So even to the moon of what we consider to the moon is still really bad for PayPal for people that bought at the top at $250, $300 a share. However, with Alex Chris shaking things up, this really could make a difference for PayPal. If you take a look at the screen right here, PayPal is trading at $50.98. It's literally right here. The last time PayPal was trading at $50.98, PayPal was right around here, April of 2017. April of 2017. For you guys to understand, the revenue of PayPal was $13 billion in 2017. The revenue of PayPal in 2023 is going to be $30 billion. Let that sink in. PayPal has never been as cheap as it is today in terms of PE, price to earnings, both trailing 12 months and forward PE. I believe forward PE of what we think PayPal is going to make in the next 12 months right now is in single digits. I think it's like an 8 or 9. It's super freaking cheap. PayPal in terms of all these metrics is cheaper than a Coca-Cola or a McDonald's or a MasterCard, whatever. Guys, at the end of the day, I'm not talking you into anything. You do what you want to do. You're a big boy and girl. I'm just giving you my own personal opinion. This is purely entertainment and education. It doesn't mean I'm right. It doesn't mean I'm wrong. Some people hate on PayPal and just want it to not succeed. I think PayPal is going to have a good 4th quarter and an even better quarter 1 and quarter 2 once it's being shaken up by Alex Chris, and they focus specifically back on being a mega payment processor. They're moving globally, internationally, and transaction margins are going to go up. PayPal, very simple. For anybody that doesn't understand what's happening to PayPal, their transactional margins are going down. The reason why is they offer something called branded and unbranded PayPal. Branded PayPal is PayPal as you know it, and unbranded is when a company literally has PayPal, but they call it their own. For example, like an Uber and a Bookings.com, things like that. The transactional margins, the profit margins on that is significantly less for unbranded than branded. However, the profit margins are going to go up when you talk about international unbranded. Hopefully, this is going to change in quarter 1 and 2 of next year. That's what I'm counting on. And honestly, I'll probably be out of this stock by summer, mid or late summer of next year. And if I made a mistake, I made a mistake. But if I'm right, I'm going to make a multi-bagger on my investment and I'm going to reinvest that into something else. But who knows what happens by that time. But am I bullish on PayPal? Absolutely. Am I still bullish even though the price is at $50.90? Absolutely, I am bullish on PayPal. The only thing is, I wish that I was doing my leaps at these prices instead of when I was doing it, which was like low 60s. But I remember when PayPal went from 60s to low 70s, yo, I was like 3x up. It was beautiful. So let's see what ends up happening. Let me know in the comments down below what you guys are doing with PayPal. Thank you so much and enjoy the rest of your day.